Okay, ladies and gentlemen, welcome to this video. Now, I really advise you to look at my other channel where over 1.5 years I posted over 230 videos documenting live trades in the foreign exchange markets I did. As you can see, 95% of these trades worked out. And in those videos I basically proved to you how the so-called smart money cartel implements price manipulation and takes advantage of the so-called dumb money majority of market participants. In other videos I explain why that is like it is and who the players are, etc. Now I really kindly ask you to go to that channel, see the link in the description, and to watch at least 10 videos, better 20, so you get a flavor of what I'm doing and how the market actually works. Because on this channel here I will concentrate on explaining those kind of general principles, and I will also answer specific questions that were posted to me by the community. It's not difficult to see that I developed this knowledge over years. I invested thousands and thousands of hours of screen time. That was the only way to figure out how the dynamics are and to understand this kind of principles I will show you in a while. I believe this is secret knowledge. What I'm showing you here for free is very, very exclusive. You will not find this knowledge anywhere else, in no book, and I can assure you that you will never ever think about financial markets the same way as you did before. And while I already delivered you the evidence, I will now go this next step and actually show you the general principles, these algorithms used by the smart money adhere to. So I will basically demonstrate here how this works, so to speak, and I'm sure that this is of very high value for you guys, whether you want to improve your trading, whether you have a strategy that needs to be tweaked, whether you're doing something completely wrong and you're losing money. This here should help you a lot. Okay, so let me say straight away that so please watch the live trade videos on the other channel, then come here and watch the explanations. Feel free to post questions. I will then maybe address them in other videos, and in order to keep me motivated, please be so kind to like the videos, to subscribe to the channels, to share them, to leave positive comment. That's all I'm asking from you. So if you like what I'm showing you here, please do that. In that case I will keep on doing this. Okay, so the question posted to me was, will the price always be attracted to the highest accumulation of stops? So from the looks of it, you should never trade accumulation points but trade towards them, and as soon as they clear the stops, take the profit. Okay, so in general the answer to your question is yes. However, it's not that simple. While the mechanics as such are highly complex, it is not rocket science neither. But I will show you something very nice right now. Okay, so make this diagram to be in a position to better explain to you what I mean. So this is a price, right, as you see from the other videos, and obviously I'm just concentrating on some fundamental information here to not confuse you too much, and also to give you a chance to understand everything step by step. So this is the price. Let's say we have the dumb money longies in the market. They try to buy the price. Let's say this is euro dollar, and then in response the smart money algos push the price down against those guys. So here are the entry prices of the dumb money, they're already in loss, and now for example there's a pullback. Okay, so we have in that scenario here an accumulation of stops below the price, yeah, so below the low, for example intraday. And this here is the target. This is the accumulation of stops of the dumb money longies below the price, because when the price goes against them, at some point they get stopped out. So those price levels here, there is the accumulation of stops. So this is the target in the end. So let's call that target stop cloud. But as you know, the smart money cartel makes sure that everybody loses. It doesn't matter whether the dumb money traders bought or sold, whether they trade reversals, whether they trade breakouts, whether they trade trends, pullbacks, whether they scalp. They found a way, and that's quite amazing, that everybody will lose in the end. And I will show you now how they do it, because it's completely counterintuitive. You would think, okay, when the price goes one way, somebody will lose, but another group of traders must win. But they actually managed to kill everyone in the end, and I will show you how they do it. So let me just show you with another color so you can better see it. If the smart money would just do what you just described here, they would simply push the price down and take out the stop. Oops. Okay, let's do that again. Sorry about that. If they would just push the price down and take out the stops, yeah? And then, for example, after that, there's an accumulation up here, and they do the same. They go straight there and take them out as well. Now, this is not in the interest of the smart money cartel, because, firstly, people would realize that stop runs would be a dominating factor in the market, so the manipulation would be completely revealed, and they have no interest in that. They want to keep it hidden as long as possible. That's one thing. And the other thing is that it is more expensive to do that if they would just straight move the price to these kind of levels. And there are other reasons as well I will not elaborate on for now. So they do something different, and that's a base case. So whenever I say this is the base case, it means that's what they normally do, okay? So the standard scenario in a setup like this is the following. So you have the target stop cloud down here. That's what they want to take out eventually. And you also have some stops of the shorties who are placed on the right side. Yeah. Now, if they would go straight down, these shorties would make a profit. So they would be placed on the right side. Okay. So then these guys would win. And as you know, that's the last thing the smart money algos want. So they do the following. They do a so-called pre-stop run counter move. And that's a base case. Before they go to the target, they first go up. They take out at least the first short-term stops of the shorties, which are also close to the price. And once this has been done, they go back into the range. And if there are new stops up here, guess what? They will do it again. And once this has been done a few times, then they will go for the stop run. Boom. Okay. So this is very important to understand. And guess what? As a general rule, if you assume that there will be 3 pre-stop run counter moves, that's not a bad idea. Okay. So that's what I call the pre-stop run counter move principle. And this principle is connected to a more general one. That's very important now, namely the time and range principle. And this one implies the following. The smart money algos will always use the time and range to the max. They will exploit those two factors to the maximum. So first of all, there is no need for them to quickly take out main targets. The opposite is the case. They play with time. They play with the non-dynamic nature of the beast. Yeah, that helps them, making sure that people lose no matter whether they're short or long, and no matter what kind of strategy they apply. They also use their range to the maximum. So that means that if in a scenario like this here, you can see the smart money position, the dumb money positions of the longies are here, for example, and the dumb money position of the shorties are this price. Now guess what? Between those two positions, they will use the range to the max. So they have an incentive to move back and forth between those kind of accumulations of positions. Because guess what? If they go too much up here, these guys get into profit. So they don't want that. If they go too much down here, these guys get into profit. They don't want that neither. So in such a situation, you can have a consolidation. And that's a base case, guys. You can see that every single day. Yeah, the price moving in a range. Not a linear range, of course. Not ping pong. Yeah, but it stays in that range because there are dumb money positions on both sides. So there is no, please understand the following, guys. It's counterintuitive. There is no reason whatsoever why the smart money should just make a quick move, take out the target, and let these guys win here. No. At least they will do a few counter moves and take out the closest stops, the tightest stops of some of these shorties. And by doing that, they automatically reduce those shorties which were in the way. Okay? So that's what I'm calling it. They price in the dumb money positions. And that's the first restrictions on the stop run. Okay? So when you have a stop run that's about to occur, they will do that eventually, but a minimum condition is that they at least price in the dumb money positions that are in the way. Okay, that's vital. That's every single day you can see that. Yeah. So these are the kinds of principles you need to understand. It is not super complicated, but it's not rocket science neither, as I said before. And it is an interplay between the dumb money positions, the dumb money stops, and other meter levels. Okay, these are very, very vital. I will explain these only at a later stage, because you need to, in addition to these kind of principles and this interplay of orders, positions, etc., you need to also understand meter levels, and there are a few of them. And this is, of course, even more secret knowledge, and I will at some point also touch on that. But let's go step by step and understand the principle first. Okay? So please be aware of this. The pre-stop run counter move principle, yeah? They don't go straight to the stop accumulations. They first do a counter move at least to close stops. And you often see that there are, for example, a few counter stops and then the accumulation. So they often just take out these guys. These stops disappear because all the information is live. And then they go. The time and range principle, no rush, yeah? Maximum range. The more they move the price, the more tight stops they can take out on both sides of people trying to scalp, etc. Yeah, so that makes them money all the time. And you know, by pricing in any positions which are in the way, they make sure that at least most of these guys are stopped out or put into a drawdown or leave the market. These are very, very, very important principles, and this is secret knowledge. I was able to figure all this out by thousands and thousands of hours of observation. Okay? So I hope that answers your questions. Will the price always be attracted to the highest accumulation of stops? Yes. It will eventually go to the high accumulations. And of course there are different types of stops. You can see on my chart. There are short-term stops, medium-term stops, and long-term stops. But I elaborate on that on another video. And it's important to understand the difference between all these. And of course the weighting is different. So from the looks of it, you should never trade accumulation points, but trade towards them, and as soon as they clear the stops, they grow. Well, yeah, you can often observe in the market that, for example, there's an accumulation, the stop run is done, they took out this, so the stops disappear because they're not in the market anymore, and then they reverse, yeah. And often you can pinpoint, especially when it comes to medium-term stops, that once this is called a post stop run counter move. Okay, but I will talk about this in another video, I guess. Otherwise everything is too much. And yes, of course, there can be good trades. For example, if the price like here goes in one direction, yeah, and you have a nice target there, so this is a nice pullback entry around here. Because basically it goes, so to speak, in the wrong direction and gives you a nice entry for the price. You can see in many of my videos that I did exactly that. So in fact I was waiting or placing limits on the counter side and getting filled there and then riding down to the actual target. So you're absolutely right. You should trade towards those targets at good prices, yeah? Because guess what? If you try to enter here, so close to the stop run, you can be target to the pre-stop run counter move, and this is also the base case. This is why you should never trade expensively towards a big accumulation, except in specific scenarios. So the base is there that if it's close, it worked all its way close to the accumulation, but then it does an exaggerated counter move to shake off people who are placed correctly. Okay, but that's worth another video as well. Okay, I hope that you enjoyed this video, and I will try to switch to a more dynamic style. Some people say that the trade videos are a bit boring and I'm talking too slow and so on. So I'll try to make it a bit more interesting. And when you look at live chart here from euro-dollar right now, trading at 1.1705, well, guess what? It's going flat, and it's no coincidence that it goes flat. Okay, just took out this medium stop here, the stop accumulation. You see, it's no coincidence that the price is exactly trading here now, because they went up, bang, look, and took out the stop here. So soon this will disappear because it's taken out. And as you can see, the dumb money positions are real support and resistance to the price, otherwise they would be allowed to win. Now of course some dumb money is allowed to win eventually, so there is a so-called dumb money tolerance, and this is a very important principle, but that definitely deserves another video. Okay, but just to summarize everything, here you see this, the short-term stops of the dumb money, yes. So the stops of the shorties, the stops of the longies. Here you see the medium-term stops of the dumb money. Okay, the yellow one and orange one. So yellow above the price and orange below the price. I explained it in another video. And these black-white ones are also short-term stops of the dumb money. And here you see the position of the dumb money. So green dumb monies are long at those prices. Red dumb money is short at those prices. Okay, and the violet lines you see here, these are actually long-term stops. I will explain this in other videos. Please ignore this indicator. For example, people were asking about it. I don't use it for trading. This is unlike these ones which are completely custom. This is available. I don't use it for trading. It's just on my chart for orientation, nothing else. Okay, it looks better than it is. Yeah, I know you will say, well, look, you just enter here short, you enter here long, you enter short. It doesn't work that way, believe me. This is just for my orientation, so I know where the price is compared to where it was, let's say 30 minutes ago and whatever. Okay, so please be aware of this. And those lines here I will not explain for now, and the other indicators below I will not explain for now. All of this is stuff for other videos. So yeah, if you like this kind of secret knowledge I'm exposing, yeah, then please be so kind to give me something back in terms of likes, subscribes, shares, comments, especially comments. You can keep me motivated by posting positive comments, and the more that happens, the more I'm willing to reveal bit by bit. So this was a first video in that context. I wish you all the best, guys. Stay safe. Do not make the rich richer. And have a great day.